All right, let's continue on with calls. We're talking with William. William, you're with Allworth's Money Matters.
Hello, Scott and Pat.
Hi, William.
In lieu of the recent announcement by Walmart due to the tariffs, and now I see the stock market's really tanking, what sectors of the economy do you think I should avoid investing in?
What sectors do you think you should avoid?
Well, for one, automobiles.
Okay.
I heard retail wasn't going to be affected, but now Walmart seems to feel that way. It's okay. And then I understand lumber, because all the lumber comes from Canada. And that's all I can think of. I'm just wondering what hidden ones that I should be aware of.
And what do you think is going to happen because of these tariffs?
Well, I think Trump's using them as a bargain chip for sure. They might go lower, they might go higher. I think myself it's going to tank the economy, but that's just my opinion. I'm wondering what yours is.
I'm not worried about it even a little.
Neither am I.
Really?
Not even a little. And I think that you said the key word right there, which is bargaining chip.
Uh-huh.
Right?
Right.
Look, like him or don't like him. Right? I am not a huge Trump fan. I just flat out, but I like many of his policies. But I got to tell you what I'm impressed by is he brings people to the table for a conversation.
That's for sure.
Look, you cannot negotiate a deal unless you're sitting at a table having a conversation. And he forced countries to the table to have conversations by coming in and saying, I've got a huge hammer and I'm not afraid to use it. And he will use it.
Right.
I mean, he's already used it. Right. Mm-hmm. And so because of that, look, I listened to this podcast with Peter Navarro a couple days ago, and I think it was on the Daily, and he said something that was really, really interesting. My older brother Chris and I actually had this conversation about this 2 or 3 weeks ago, which is, look, if we as a country lose our manufacturing capabilities, we are in great risk in a war. You think about how we won World War II. How did we win it?
Lots of tanks.
Lots of tanks.
Planes,
ships, those things, right? That's how we won it. And obviously we put people on the ground, but we had a manufacturing base that they deployed, boom, like just, Rosie the Riveter, the whole country.
We've got phenomenal natural resources.
Unbelievable natural resources. So, will there be some pain getting there? Yes, but the reality is we need to bring back much of our manufacturing so that we actually have a stable, not only an economy, but the middle class and lower class actually can be employed in manufacturing. Is it going to drive prices? Yes, it's going to drive prices. I mean, there's no question. Are people still going to consume?
And maybe there'll be tariffs put into place where we go into recession.
That right, but the counter to that is that if the cost of oil comes down, that will offset a lot of this, right? So,
and for a long-term investor,
this
you don't really care about this year or next year. You care about what things are like 5 years plus.
Yeah, and listen, there's people that are listening to this program
think
that
we're idiots
and hate Trump, right? And hate Trump.
Mm-hmm. Right.
Look, whether it was Trump or someone else doing this, I love the fact that there's conversations. People were at the table saying.
Well, there's lots of conversations on lots of different topics that many Americans think these are conversations we need to be having, and we wish our government had been having these conversations that haven't and are finally happening now. Whether it has to do with our health as a nation, right?
And who knows where that's going to go?
I'm talking about just our basic health. Whether or not you like
Yeah.
What's
So we don't want to turn this completely into a political.
It's
but
obviously a very political time right now.
But these policies are going to affect us in the short term. There's no question. There will be some pain. But as a long-term investor, right? But it could go the other way too.
But here's a couple things to think about. Let's assume, William, that you're convinced that the markets are going to have some sort of sell-off. There'll be a bear market. The stocks are going to fall. And historically, stocks have fallen 20% or more about every 4 years, last 100 years. So we're kind of due for it, 20% drop or more. And historically, the markets have always recovered and went higher than they were before. So let's assume those two things are accurate again. First, if you're going to get on the sidelines, you have to be right on two areas. One is, when do you get out? The second is, when do you get back in? And that's really difficult.
In the market as a whole, and sector rotation is even more difficult. Because what you're talking about is sector rotation.
Right.
Let's move out of this industry, into this industry, into that industry. And there's been some studies, and there's enough ETFs out there right now that specialize in just specific sectors.
Exchange-traded funds.
Yeah, exchange-traded funds. And so you can look at flows, money that what people put into those sectors. And if you look at how the performance of the sectors have done relative to how the people who've owned those sectors, they would have been better off not trying to allocate their money because most of them underperform what they would have had they just bought everything and went to sleep.
What that means is they put the money in after the run-up is because, so you look at the flows and you look at the returns, most investors underperform the sectors they invest in because of when and how they invest in it.
They buy when things are high.
How much of your portfolio is in the stock market, William?
Most of it.
How old are you?
I'm 70 and a half.
Are you living on any of it?
I'm still working. I'm afraid to retire.
How much, approximately, if I may, what's the size of your investments?
Right now they're $500,000, but when I retire, I'll be getting my pension, which will be about $1 million.
And how much do you earn at your job?
Over 120 a year.
And are you afraid of retiring from only financial issues or from a variety of issues? Let me say reluctant to retire. You say afraid. I mean, hesitant to retire.
Yeah, well, I'm hesitant because I like the people I work with.
Okay.
I like my job.
Okay.
Yeah.
Well, then no one said you had to.
that.
No one said you had to retire.
I don't think so. Maybe they have.
No, I don't work with you, so I don't work with you. So, have you visited HR lately?
Well, I would say that the climate has changed as far as older workers.
That's right.
They're more valued.
And,
There's not as many.
yeah, more values, but not by HR.
Okay, so you know what, you might benefit from sitting down with
There's
a
no
financial
question. I'm just
advisor.
thinking, a financial plan, those that have gone through, and there's studies on this, those that have gone through a financial planning process, when they meet with a financial advisor, have a financial plan, whether it's written or it's just something on the computer screen you're looking at together, having a financial plan that looks at your probabilities of success in the future. They can go through a variety of different scenarios. So
What if the market falls by 20%? What if inflation moves to 8%?
if we have another great recession like we had, how is this going to impact?
And they'll
things?
tell you, okay, you have a 97% probability of having money till you're 110. But there are four things.
And the studies have shown those that have gone through that process have much more confidence about their financial future. And it's not relative to their net worth either.
That's my point, Scott. There are four things that make for successful retirement. One is money, the confidence in it, not the amount, the confidence that you have enough, right? The other is people, purpose, and health. Those are the four. If you look at what makes a successful, and we actually hired a firm and we did studies and we actually did workshops all around what makes for a successful retirement. Those four things, right? People, purpose, health, and confidence in your money, right? So what you just said, right? Your job sounds like it's fulfilling it right now. It's people and purpose, right?
Right.
So if you're being satisfied, then don't feel the need to retire. But at some point in time, if you're like every other person on this earth, your health will become an issue in whether you continue to work, which is why you want to go through a financial plan. Yeah,
right.
You want to go through a financial planning process so that you're confident, at least with the amount of money that you have. And I would recommend highly. They'll charge you a couple $1,000s and bring you through the process. You can do it either in person or by Zoom. Just hire a qualified advisor.
And to get to the point where you're not thinking about Walmart, what's going on with Walmart?
Well, of course, Walmart's going to say that they're going to come out and say that there's headwinds ahead because of this. Look where they get most of their products from. Right. Naturally, if I was the CEO of Walmart, I would say it too. I would say I'd push back on tariffs.
But also think, well, you're 70 years old, right? So your life expectancy, if you have a normal life expectancy, is probably, I don't know, 15, 20 years, probably 20 years.
Right, 20 years.
So 20 years is a long time. We're going to have many different administrations over that time. Congress is going to actually, they'll probably be the same people wheeling them in.
We hope to have many different administrations. We hope to have many different administrations.
Because Trump's the healthiest president that's ever lived. Apparently.
It's incredible.
Yeah, it's unbelievable.
All the doctors say. All the doctors.
But my point is, like, things are going to change. Things are going to come and go. There's going to be other concerns. There's going to be other threats. That's a normal part of life. And you could either, from a financial standpoint, you can choose to get caught up in that and have it impact your daily life, or you can structure things in such a way, have a plan in place, and live your life. And the reality is most investors do much better by having a plan in place, a strategy in place, and not reacting on a daily basis or weekly or even an annual basis to what's happening out there. Yeah. Because most professional money managers can't outsmart the market. They would be better just buying and hold long term. And on the ones that pick stocks, most of them don't do better than just owning the index. So with all their teams of smart analysts working for them.
So anyway, it was a pleasure speaking with you. I'm glad you enjoy your job. How many hours a week do you work?
40.
Yeah. All right. Are you married?
Not right now, no.
Well, that leads me to believe that you might be soon.
Not right now.
All right.